Good morning, everybody. Thank you very much, Rensu, Minister, for inviting me here. I've always wanted to come to Gibraltar. Last year, we drove by it a couple of times, and we looked at the rock, and I said, I need to come here. And the invitation came, and I was very pleased that we finally did it. My talk is really about where we are in the blockchain space from what I'm seeing and where I think it's going. And I'm involved in a lot of things in the space. Recently, it was announced that I'll be moving to Switzerland, so I have been coming a lot to Europe. I'm very impressed by what's going on here in Europe, and I'm going to be much closer to what's going on here out of Geneva, basically. And just by way of disclosures, as I said earlier, I am involved in a lot of companies. I also run the TokenMarket, the Token Summit in New York and San Francisco. We've had the pleasure to have the minister last time, and in San Francisco we had Nick as well from the Gibraltar Exchange. So I'm very much interested in also bringing the message that you have here into the US market, where I'm also quite involved. And if I mention companies, I may be involved with them as an advisor or board member, but that's what it is. So usually I like to start by asking the audience if you think that tokens, are they a distraction or are they a catalyst to the blockchain in terms of what is going on right now? Because lots of attention is on tokens, obviously. How many of you would think that tokens are a distraction? How many of you would think that tokens are a catalyst to of course, the majority? So my answer is that it depends. It depends if it's tokens 1.0 or tokens 2.0. 1.0 being copying what we are seeing and not being that innovative, meaning that, oh, we're doing it this way on the web, let's do it this way on the blockchain just because it is the blockchain now. And I'm sure if you're involved in the space, you are seeing sometimes startups and companies that say, well, let's just do it on the blockchain just because it's this new thing. But what I'm more excited about is the new ideas and doing things on the blockchain that we could not do before. So this here is the startups doing old things, 1.0. We have old companies that are doing new things. For them, the blockchain is new. This is mostly B2B and business-related activities. They will be busy for the next 10 years, saving money and making things faster. That's fine. But the most exciting area is new companies, startups doing new things. And this is where we want to see more examples of applications that we could not do without the blockchain. And that's really where we are going to see more activity and more value in the long term. Some of these, many of them will fail here unless they start to iterate to something new. It could be that they start with something that is mundane, but then if they don't iterate fast enough, users will not come just because it's on the blockchain. There has to be something that you are using that the blockchain is enabling us that was not possible before. So it's very important to stay very true to the blockchain fundamentals. Like, what is the blockchain? What does it do? Why are we doing this differently? That is what we have to keep remembering and checking the boxes. Are we trying to replace new intermediaries? That's one of the aspects. An old intermediary used to validate transactions. Now we don't need that. We don't need the databases to check each other. The ledger is that. So are you doing some of that? Are you introducing a new liquidity in the value, whether it's tokens or assets or whatever the digital value is? Are you trying to prove something that was not able to be proved before? Because the blockchain is a immutable record. Once you record something on the blockchain, you cannot erase it. So can we go and check the truth there, for example? Can you allow the blockchain to automatically enact the consequences of something? This is where smart contracts come in. What is a smart contract? It's just business logic. If this, then that, with some money involved, then move the money from here to here because these conditions were met, or change the rights or the ownerships, the governance aspects. So let the smart contracts do something that we could not do before automatically. Is there a peer-to-peer infrastructure? So if you think about it, Bitcoin has a peer-to-peer infrastructure. Ethereum has a peer-to-peer infrastructure under it, the number of nodes, the computers that connect each other. But applications now have a peer-to-peer infrastructure. Any large-scale blockchain application or protocol now is going to have nodes. It's like another cloud out there on top of the internet. And do we have that? Is there some kind of decentralized governance? The blockchain is about decentralization. It is not just about central control. Are we enabling the network to govern itself, not too aggressively at the beginning because accidents will happen, but initially, slowly and slowly? Are we seeing new protocols? It is possible that many of the web protocols that we know today, HTTP, HTML, will have their equivalents in the blockchain space. And are we enabling new ownership models? Because that is what the blockchain enables us to do. We all have our own wallets now. We can have self-custody of funds. We can have ownership of assets ourselves, and we can transact on those. So let's be sure that we are staying true to the fundamentals of the blockchain and what is enabling all this innovation, and that's very important. So when you look at the market, you can look at it in different ways. One way to look at it is to say, oh, look how much money we have raised. And this is important, of course. And this chart goes up to March. We've raised, this number is now $26, $27 billion. And what's interesting here, as you can see, the US is not dominant here. You could argue that Europe is dominant as a whole in blue, and this is great. This is a very global phenomenon. And then even if you look at it at the, this is up to like a couple of days ago, June is as strong as the last 2 months. So it's about $1 billion a month. This is great. I mean, it means that the investment is there, but it's not enough. I mean, you can look at this and say, well, yeah, we have these big numbers, but the numbers that I'm looking at more and more now are real metrics. And now we are starting to see usage. So we have to look at the metrics. For example, 200 tokens are being created, 200 to 300 tokens are being created every day. Now, not all of them become currencies, but this means there's a lot of activity and innovation and trying things. More than 1 million people have participated in crowd sales overall, worldwide. 20,000 smart contracts are being created every day. And you know how many of them are being used every day already today? 1 million smart contracts are being used. This is like real activity on the blockchain. Ethereum, for example, was announced a month and a half ago. More than half of the transaction types on Ethereum are coming from smart contracts, as opposed to just money's changing hands. So the other non-smart contract types are just transfer money from here to there, that currency transactions. When there's a smart contract involved, there's usually an application behind it. So there is some real value. There's some functionality. It's just not just a transfer of money. CryptoKitties, which was the most popular application, it still is today on the Ethereum network, in the last 6 months, since they opened up in December, has done 2.8 million transactions on the blockchain. These are significant numbers. So what I'm looking at right now is not just these market caps and total raised and daily. This is fine. This is the input. This is all the beginning. When you raise money for an ICO, it's the start of something. What I'm looking at more and more is now active users. Because at the end of the day, any new company, any new protocol, any new project is like a startup on the blockchain. You have to get users. You have to get real activity. You have to do transactions. You have to see what is the value of these transactions. How many wallets? What's the value inside these wallets? It's about money. What is the value of transactions going in and out these smart contracts? And if you're very technical, if you're still developing it, so how many downloads? How many nodes do you have? How many active addresses? How many repositories, commits, application downloads? These are some of the activities that are more telling about the reality of the adoption of the blockchain. Because all this money that's coming in, if it doesn't get used for real things, then we have failed. As you know, the blockchain is all about decentralization, and you can be very ideal and say, well, I want to decentralize everything, and I want everything to be on-chain, meaning that you record everything on the blockchain. But if you do that, this is very ideal. It's impossible. What happens today if you want to put everything on the blockchain and you want to decentralize everything? Ideally, accidents happen, or the blockchain chokes. It's like a traffic jam. What happened with CryptoKitties back in December, it was the equivalent of a traffic jam. All the transactions wanted to get validated at once, and there were big delays. So there's no blockchain today that is fast enough to allow all this volume of transaction. So what you have to do in the meantime, and there's nothing wrong with that, is have degrees of decentralizations and not put everything on the chain. Some things can be off-chain, some things can be on-chain. This is where the architecting part and the designing part of blockchain applications come in. And the clever ones have a good balance between on-chain, off-chain, and between decentralization and some centralization, because we have to learn about decentralization before we can apply it automatically. The ideals of an application that is decentralized may have, again, all of these check boxes. It should have at least one of them, perhaps 2 or 3 or 4. There has to be an infrastructure, there has to be a protocol, distributed content. Content now can be stored outside of central servers. It could be in the cloud, in the new blockchain distributed cloud. The users have to own something. They have to be empowered to decide what to do with their data. And there has to be the distribution of rewards as well. It means that not all of the benefits and rewards go to a central entity. For example, Facebook today, if you think about it, the average person spends about an hour per day on Facebook. And what do we get in return? Nothing. We give them our attention. They take our attention, they aggregate it, and they resell it as marketing, as advertising. And they make all the money, and we have given them our attention and not anything monetary in return. The new model now is that if you give attention, you're allowed to receive some tokens, perhaps. You're allowed to receive some value. Maybe you give data. Your data is valuable. You should receive something back. And there are new companies emerging that are behind these models. If you're on Steemit, for example, how many of you are on Steemit or have gone on Steemit and earned a few dollars here and there? Exactly. So you spend time, you write something, you get compensated, you get users comment on it, they repost it. The more activity there is, the more you get rewarded. So our attention, our data, information about ourselves, that's valuable. In the future, we want to be able to share these rewards, and that's what the blockchain enables us to do. Some examples today, you can have peer-to-peer commerce like OpenBazaar, CryptoKitties in this new area of crypto assets or crypto goods. These are assets that did not exist before. I could not put a kitty in my pocket and give it to you. It only exists on the blockchain. A kitty is a cartoon character of a cat that is unique. It's a game, yes, but it is the beginning of what could happen for the future of what is called non-fungible assets, non-fungible goods. These are unique assets that exist only on the blockchain. And what's interesting is that I can sell and buy these assets without having anybody in the middle. And with the CryptoKitties as an example, they can breed each other. So the DNA of the kitty is generated on the blockchain. And it has a record that nobody can change. And you can create a third kitty, and the kitty can own a hat. So now you have goods inside of other digital goods. That's very interesting. Decentralized storage, decentralized computing, decentralized content, and the list goes on. Last month I wrote a blog post trying to understand where all of the decentralized applications are, also called dApps. And it's kind of ironic. We have to go to centralized directories to find out about decentralized apps. I mean, that's one of the dilemmas of decentralization. Search becomes a little bit more complex and challenging, unfortunately. It's been the case since file storage happened in the peer-to-peer sense. That's why you have to have some search on top of the decentralized network sometimes. But that's okay. I mean, we will find ways to discover them, and eventually you will gravitate and say, well, I like these 5 applications. They are my daily go-to. In the same way that you have your go-to applications on your smartphone, and you may have 50 of them installed, but you use 10 of them every day. In the future, many of these will be decentralized applications, and many of them will have a wallet inside of them. Right now, I can bet you maybe 1 or 2 of your applications have a wallet. But in the future, more and more of them will have a wallet as part of the standard way of using the application. And the wallet is part of the interaction that you have with the application. And sometimes you don't even know it's a blockchain application. It's all going to be in the background. Now I go into a segment where I talk about what needs to work, what needs more work, and what I think may not work. So what needs more work in the area of the blockchain is standards. And we need to have standards. Why? Because standards bring adoption. Think about the ERC20 standard, very simple example. Why has it become so popular? Because it's a standard. Everybody is using it. You don't have to learn too much to use it. You just apply it. Somebody's invented the way to do it, and then you just apply it. That's what standards are good for. And there used to be a joke we used to say, well, the good thing about standards is that there are so many of them to choose from. But the reality is that when standards are adopted, then they become popular, and then it generates more usage. We need to solve the scalability problem, but I can assure there are enough engineers from the Ethereum camp and others that are putting a lot of effort to solving that. Back in 95, 96, the internet was not as fast as it is today. And we had to solve the internet scalability in a stepwise manner. And the same thing is going to happen with the blockchain. So I'm not too worried there. Interoperability is going to happen. More and more blockchains are going to talk to each other. So it wouldn't be inconceivable that you could use one blockchain for computation, another one for storage maybe, and a third one for transaction validation. It is starting to happen in a small scale right now. But more and more of these blockchains are going to interoperate with each other. We are going to see more decentralized exchanges. It is not just about centralizing, kind of re-centralizing the transactions with exchanges, but more and more will happen peer-to-peer because that is the native way that the blockchains wants us to work. More and more native assets, and it's not just in the creative area like the CryptoKitties, in the finance space as well. All these financial instruments will live only on the blockchain. I'm waiting for the day where more and more financial instruments exist only on the blockchain and not just are on the NASDAQ and the New York Stock Exchange, and now they're going to have the blockchain equivalent. Security tokens could be that as a starting point. And then the physical sense, we could fractionalize buildings, real estate, things that are physical, and then give them a token to increase liquidity. I see more token types within a particular application. The term is hybrid tokens. So one token could be on the inside, and another one could be on the outside. Why? Because the inside, the operations, that does not like speculation, does not like fluctuation of price. So users want some stability. Of course, there are stable coins. I'll mention them in a minute. But the idea, like if you think about it today, when you go to an Apple store, for example, to buy an iPhone, you don't buy an iPhone with Apple stock. You use dollars, euros, pounds, whatever. Today, in the world of the blockchain, the same currency is used as an appreciation currency, and it's also used as a payment currency. So that creates a little bit of challenge in terms of understanding how the fluctuation of that currency affects the price of something. That's why we have to understand the economic models behind the blockchain, which we are just beginning to do that. I see a lot of spreadsheets and theoretical papers to try to understand them, but in reality, theory is only as good as you've been able to test it in the applied world. And we need to evolve there. What needs more work? Killer features. Sometimes I hear, well, this blockchain has this killer feature. It's better than Ethereum, or it's better than this, better than Bitcoin. But it's not anymore about killer features. When I talk to the Ethereum conferences, and I do that once in a while, my first question is a bit of a trick question. I tell them, what is the most important feature about Ethereum? And the answer is like, it's not a feature. The most important feature of Ethereum is its ecosystem. It's the number of developers, the number of startups, and how much money is going behind it. So now blockchains are not going to be interesting just because they have one killer feature. You need to really bring everybody along with it and then have an ecosystem behind you. Stable coins need more work. I think we are still in the first phase of the stable coins. And look what's happened recently with Tether. There could be speculation they were behind maybe the ups and downs in the price of Bitcoin, because it's like a balancing game. Like you're trying to balance things out and you don't know when the bottom is going to fall. There's a lot of risk today in the stable coins that I'm seeing. On-chain governance, we have to learn more about that. There are lots of attempts to do on-chain governance. The first attempt was a big attempt, the DAO, but it failed because they tried to do too much too quickly without understanding. So we have to walk before we can run. And again, understanding the economic models is something that needs more work. What I think will not work is boil the ocean approaches, where I get a startup pitch that says, well, we're going to bank the unbanked, the 3 billion unbanked, boom, just from day one, we're gonna bank them because they were unbanked. Oh, that's that easy. Or we're gonna attack the $1 trillion supply chain in whatever. Yeah, of course. Supply chains take decades to perfect, and now you're gonna come and... Startups do not attack incumbents head on because you get crushed. Startups go around, under, over. They go in a new area that nobody is thinking about. That's how you start. You start by attacking a big problem by going where nobody is, and slowly and small. Head-on disruption doesn't work. White papers, of course, Bitcoin, Ethereum, and others started with white papers, but they were very quickly followed by real implementations. So white papers are just a plan. And as you know, no plan survives the battlefield. You have a plan, you go on the battlefield, you get injured, you change your plan, etc. Dressed up websites. The more advisors, sometimes you see more advisors than the team. It's a bit of a red flag. Huh? Cool ideas. Cool ideas are not enough. Cool ideas is not what made the web what it is today. It takes more than that. No governance, no accountability. Companies take money and then you don't know who's overlooking it. Are they really getting mentorship? Are they really accountable to the investors? Are they really telling you what they are doing? And high valuations too early. I'm starting to see some really crazy valuations. What's happened in the US, because the SEC has been very strict on public ICOs, what it has done, it has pushed everybody to do private placements, private placement offerings. And these private placement offerings operate under the radar. Companies are giving themselves valuations that are really crazy without even having started anything. I'm seeing valuations of $50 to $100 million just because. And with teams that have not even never worked together. So the more we see that, the more I start to get worried. And then there is the issue of classifying tokens, as you know. FINMA has classified them. Law firms are classifying them. I try to classify them. But the point of classifying tokens is not really to regulate them. The point to classify them is to better understand them. And maybe the token as a utility is what we need to better explain, to better describe. And I don't think anybody has done a good job yet to describe the utility token very well. Because in the US especially, they are saying, well, now everything is security. Because that's what they see. Their box is securities, and everything is now security unless proven otherwise. To have a utility for the token, you have to have the network. Again, I use Ethereum as an example because I was involved with them from almost day one. People forget that. For the first year, if you had bought into the Ethereum initial coin offering, for a year, you couldn't do anything with your token. You didn't even have it. All you could do is pray that they would deliver. And they did. So first they turned on the network, and then they started to deliver the tokens, and then it became public. So we forget that. And some regulations now are adding a feature where you have to have operation. The judgment on the classification of the token is at time of issuance. So when you issue those tokens, you have to have a network. And that's very important. What happens, let's talk about regulation, because Gibraltar is playing an important role here, obviously. The easiest thing, which is what the Western regulators are doing, is doing nothing. It's just applying existing regulations. They say, well, we've had the security regulation for 70, 80 years, since 1933, or it just looks like a security, so let's apply it. That's easy. What's more difficult is to change the regulation, update it, or create new ones, like what you're doing in Gibraltar. That's not easy. That's more difficult. That takes hard work, as the minister said. And that's good. You are being more innovative here. The Western regulators do not want to change things, or if they do, it'll be very slow because they have to go to the legislators first. Regulators do not like to change things. It's not their mandate, actually. Their mandate is to interpret and to apply what is currently given to them by the legislators. So right now, the U.S. is taking a very slow approach. There are hearings a lot in the Senate and the Congress, but slowly. There has to be a lot more hearings before they start to understand it and try to agree that they will have to change it. In the meantime, it is what it is. So that's why the securities tokens are now emerging, because if it's easy to say we are a security token, then everybody's saying, well, let's do that. Freezing regulations, that's another way of doing it, where you just say, and this has been talked about in the US, where you just say, let's wait for a year, let's not change anything. The blockchain is still like a baby. Like, why can you can you put rules on a baby and tell the baby that give the baby adult rules? They will not understand them. They will not follow them, right? Let the blockchain become more of an adult before we can give the blockchain adult rules. Maybe there are talks that, well, let's say this is a new asset class. Maybe it's not the SEC that should regulate it. Maybe it's a new entity that did not exist before. And this is a dream of mine, which is to harmonize global regulation. It's never going to happen. In the meantime, what we have is we'll have the four spheres. We have Asia doing something, North America, Europe, and then we have the alternative jurisdictions, which are emerging right now, being more creative. Liechtenstein, Gibraltar, Malta, and Cayman, and so on. So the balkanization of regulation is already here. If you're a startup, you have to scratch your head, try to understand, do I do it here, do I do it there? If I do it here, but you have to hire lawyers and they'll help you to figure it out. I still say that classification of tokens will be very difficult. So in closing, where are we today? We are in the installation phase of this whole technology cycle. And this is using a little bit Carlota Perez's model. She has been analyzing technological revolutions for the last 100 years. And she has observed that every time there's usually a big rush to install the technology. And we overshoot that. So we install a lot, we overshoot it. And then usually there's a bit of a crash. That's what happened with the web in 1999. And then after that, there's prosperity. So we readjust and we deploy and we accelerate. But this is kind of where we are today. In terms of, we can look at it from another direction. You can say, well, we have infrastructure, we have middleware, and we have application. So I think we're kind of 2/3 of the way here. We have maybe half of the way in the middleware. We need more middleware that is easy to use. Why? Because developers, to attract the whole range of developers, the Java developers, there are 10 million Java developers. There's maybe 500,000 blockchain developers. So we need to have more mainstream developers come into the blockchain, and the only way they will do it is if you give them easy-to-use middleware, because they want to write the applications. And now we have real numbers. You can look at, you can say, well, CryptoKitties has 2.8 million transactions. Steemit has already distributed $42 million of real money to their users. Kick might become one of the most used token. They are getting ready for that, and so on. OpenBazaar has had more than 100,000 downloads, and the list goes on. Whatever you do, we have to remember, why are we doing this? The blockchain has to lead us to a better world than the one we have today, in the same way that the web has given us a better world than the one we had before the web. So let us not forget that. The blockchain is supposed to do things for us that will be better. Decentralization, more equality, more fairness, distribution, more inclusion. The economy of the blockchain is emerging in many different aspects. If you look at it from a technology perspective, the data, the storage, the content is all getting decentralized. Functionality-wise, we can spend and earn now on the blockchain. We can get rewarded. Our work now is worth something. And it's affecting all the industries. No industry is going to be untouched. So this is where we are today in the blockchain economy. Let us not forget, the Stone Age did not end for a lack of stones. The centralized entities are not going to go away on their own. Decentralization has to come. New technology has to come and start to replace them going forward. So we have to be keeping a positive eye towards that. Thank you very much.